The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the October 24th wonderful Wednesday edition of today's Opening Bell on The Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I absolutely treasure your presence here today. My outcome is to help you to become a better money master and to provide you with the tools that each of us need in order to be able to live an inspired life. Because living an inspired life, folks, that is what it's all about. We got the bounce going on in the markets here this morning. We expected that with the trend index reading that we got yesterday. I think it was about 2.7. We'll come back to that in a moment. Let's go take a look at one of our tools. This is really just a follow-up to the tool that we were talking about. Yesterday we were talking about your self-appreciation inventory list. And I hope that each of you went ahead and just put down all of the things that you've accomplished over the last 2 weeks. Maybe the last month, the last 2 months, 6 months, year, 5 years, 10 years. You ought to at least write down a few things out there. You're always going to need those types of positive things to really see what it is that you've accomplished because, you know, the way that the world works, it always throws you curveballs. And where you want to be able to gain strength from, you know, certainly is your past. You want to be able to go back and anchor all of those great things that you've accomplished. Well, part two of your self-appreciation inventory list is, what are the things you want to take a moment and identify? What are the things that you haven't accomplished here in the current year? Maybe how about, you know, what is it that you haven't accomplished that you want to? What is it that you could accomplish in the next 2 weeks? What is it that you could accomplish in the next month, the next 6 months, the next years? That's what you want to be able to also write down on a piece of paper, a pad of paper. Maybe it's going to be your iPhone. Maybe it's your Android device. All of them have memo pads. Maybe you're listening to us on one of those devices out there. We absolutely appreciate that. You can always catch the archive of this show on Channel 9. But my question to you is this. What would a game plan do in helping you to achieve your goals that you might have for 2 weeks out or a month out or 6 months out from now? How is it that the direction that you're headed in now would change if you actually had a game plan out there? I want to make sure that you have that. And then the question is, what action is it that you need to take? You know, and for me, it's really always, what massive action is it that you can take so that you can achieve your goals when? That's right, so that you can achieve them right now. Look at your self-appreciation inventory list, folks, from yesterday. That shows you that you've got a solid foundation, but now it's time for more. You're on the right track, and now it's time for another gear, because there's always another gear out there, folks. There's always room for more knowledge, you know, and there's always room to perfect your skills out there. Hopefully we're going to accomplish some of that today just simply by taking a look at the charts. You can always watch us on TigerTV. As I said, you can catch the archive on Channel 9. Remember, we never stop learning and expanding. We must never forget to take time to appreciate all that we have become thus far. And we're just simply on a pursuit of happiness out there. Happiness is nothing more than just simply becoming the person that you want to be. Let's go take a look at these markets and see what they want to become. You had the Dow finished down 243 points yesterday. The S&P off 20. We're looking at the ES Mini 30-minute chart here on the screen as we take a look at this here. Now, just as when we came in on Monday, if you were listening to Monday's show, we had a high trend reading. It was a trend index made popular by Richard Arms out there. And this is a different use of the trend index versus what Tom teaches in the the Tick and Trend workshop that he had done out there. This is really for finding short-term, one-day bounces out there. When you get a reading above 2, and yesterday was, let's see, where did it close at exactly? This is on the New York Stock Exchange, 2.77. You get a close like that, it says you're going to have a bounce. That's what we certainly had occur on Monday. We had a little, on Monday we had the Dow down 100 points at one point, came back to, I believe, positive 3, then fell off the planet a little bit yesterday. I do believe we're going to see lower prices coming into the weekend, perhaps Monday, Friday or Monday. What we are seeing, though, is a bounce occur. If we take a look at the ES Mini, we'll see one of my hammer candles forming here at the 11 o'clock time frame. As we were coming off of the Money Masters show, you had a little bit of follow through on the next candle at 11:30. Maybe on the ES Mini, we're taking a look at an A to B equals C to up pattern here that is forming your 8-point. This is intraday now. We'll go take a look at the daily chart as well. Intraday, you're looking at a low that came in at 1402. That was at the 11 o'clock session. That's your A point. Your B point, all the way up to the session that came in at 12:30 last night. The ES Mini getting up to 14.75. Goes ahead and pulls back into the 4:30 a.m. Session this morning, reaches an area where it was oversold just slightly. Now it's bouncing up 1-to-1, takes you to 14.17. You're at 14.50. 1-to-1.272 takes you to 14.21. That's on the ES Mini out there. If we go take a look at the daily chart on the index futures here, give you a better breadth of what's going on from a daily perspective. Let's go back over to the ES Mini. What is it that we can see here? We've been showing that rising trend line coming off of the June 4th low. That was your first touch point. Your next touch point coming in on July the 25th out there. We had horizontal support out there. That horizontal support had been tested for quite some time. It goes all the way back into the March 27th area. That level was tested. It was tested as resistance. It was tested as support. What happened yesterday? You had the ES Mini come crushing through it. I'll say crushing because it's a wide-ranging bar. Whenever you break an area of support, what typically happens is the market goes back up and it tests that area. That is what is underway today. Whether it's the horizontal area or it's going to be the trend line, either of those are the targets. That would be normal before the S&P continues its way down, at least coming into the Friday, if not Monday session out there. If we take a look, so that's a little bit longer term picture. You might say, hey, Steve, where is it really headed to? Well, on the S&P futures contract, let's just simply take a look at retracements. There's really two things that we would look at, retracements being one of them. 0.382 would be the first area. That price would be, looks like somewhere right around 13. I'm going to, let's see, opens here. Let's use 1390 as your target area. The next area would be right around the 1343. That would be the sweet 618 out there. If we go take a look at what else is going on in the futures marketplace, let's go take a look at the Let's take a look at the Russell 2000, because the Russell 2000 is actually the strongest of the indexes here. That used to be the weakest, but coming off of yesterday's lows, you made a hammer coming in at 11 o'clock in the morning. That was at, made a low of 803.70. Had a little bit stronger candle than we saw in the S&P future. We had a stronger bounce than we saw in the S&P futures out there. The Russell 2000 on the 30-minute making an A to B equals CD up. If we take a look at what that low is, we'll come off of, again, the 11 o'clock time frame, 803.70. That's your A point. Your B point, as it makes a high coming into about 12:30, of course, lining up with the ES Mini. Retraces back, but you can see that retracement back, and we'll go take a look at the retracement here versus on the ES Mini. You tell me which one is stronger. We'll go from the low up to the high out here. What you're going to see is a retrace back only to where? 0.382. But if we go switch back over to the ES Mini and look at the exact same levels out here, we'll go from the low that came in yesterday at 11:30 all the way up to the high that came in at 12:30. What you're going to see is a 0.786 retracement. That number, 1404.75. The ES Mini pulled back to 1404.75. How does it work, folks? The Fibonacci summation index numbers. You absolutely want to be able to learn from them. If we go take a look back to the Russell 2000, if you were an intraday trader out there and you were looking for a place to play a bounce, I would have to say it would be the Russell that I would be looking at. Why? Because 827.10, that's the one-to-one A to B equals CD. More likely 831. That would be quite a move up there, considering you're at 817.90 right now. Let's go to our first caller. Let's go to Lou in Nashua. Lou, thanks for calling. Thanks for holding.
Hey, Steve. Good morning.
Oh, Dave. David. Sorry. David from Clearwater. Sorry about that.
That's quite all right.
How are you?
Hey, Steve. Thanks for taking my call.
No problem.
I just wanted to say I didn't have a specific chart that I wanted you to look at. I just called to say to you what a great class you put on Friday. The candlesticks webinar class that you would put on, and some of it I knew, but I didn't really think about how to apply it. You kind of gave me a new way of looking at it, especially with the, take the candle from one period, add it to another, and look at the broader picture, and you know that, but sometimes you tend to forget that, take a larger picture from a higher altitude, so to speak.
It's really great to sit back and take a look at and read the market, read the message of the markets, and that's really what that candlestick work. That was one of the things that the candlestick workshop was all about. And I'm glad that you were present there. And there's nothing more exciting than to actually be able to teach other folks out there. And like you said, sometimes things are just really sitting in front of you. You just need somebody to show you maybe a little different way to take a look at it.
Yeah, it was excellent, and I was thinking of you yesterday too, because Steve, for whatever reason, when I see a hammer candle, man, I start thinking about you. I was thinking about it yesterday because I trade the small caps quite a bit.
Oh, good.
And at 10:30, I'm thinking to myself, I wonder if Steve's putting on alarm right now. So I'm thinking to myself,
we got it. When we were doing the Money Master show, I was saying, Tom, we're going to get a bounce here. 877-927-6648. If you want, David, you can stay on the line. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. The Dow futures up about 45, ESPN up about 7, NASDAQ futures up 16. As we take a quick tour around the world, you got the DAX trading up 32 points right now. The FTSE up 23. The Nikkei was down 60 points last night. Shanghai virtually unchanged, up $1.63. The Hang Seng up 66 points. King dollar back 9 cents right now. Gold trading up $1.60 out at $17.11. Silver up 10 cents out at $31.89. And we're going to go back to our man David in Clearwater. And you know, David, I appreciate your call in and your comments about Friday's workshop, but I really wanted to pay praise to you for taking. I believe you took both the buying and the selling of the D point and the candlestick workshop last week, and you know, being able to make those types of investments in yourself is just something I admire so much. So I want to thank you for taking that kind of massive action, and don't stop doing that, because that is what it's all about. There's always so much for each of us to learn out here, you know, and as I step back and take a look at it, I think those two workshops, just keep watching those over and over again and practicing what is inside there, and you'll be in great shape for that, and teach that to others.
Already have been. I've got a buddy of mine right now. Thank you for that, Steve. I got a good friend of mine who's, a trader as well, and I've kind of been teaching him what you and Tom have taught me, because Tom has been the biggest influence on me, hands down, because of,
Absolutely.
About 4 years now.
I'm only here because of Tom, so he's a big influence on all of us.
And I got nothing, but I don't want to sit there and sound like I'm sucking up endlessly here, but I got nothing but love for Tom. He reminds me of my dad in so many ways.
Oh, that's cool.
Much he reminds me of my dad, because my dad and him are two peas on a pod. But anyways, nonetheless, I don't want to take up too much time.
No, how'd you like that? How'd you like that? You know, one of the things that I spend a lot of time doing is first I lay out what it is I want to teach, and then I spend quite a bit of time trying to link the known to the unknown. So when we took a look at that candle body progression aspect, we took a look at the strength of candlesticks out there. How was the football analogy? Did that all of a sudden kind of, to be able to understand the energy level that a candle can provide to us? Did that help?
I think for non-technical people, that would be the perfect way to hit it, Steve, because my education's in engineering. I'm a mechanical engineer. So to me, what really hit the nail on the head for me the most was the rubber band analogy, in terms of wrapping around your finger and then, unwrapping it 38% of the way in the transfer of the energy that goes with it, and how it can project, what kind of D point finale you're going to look at. To me, that spoke volumes to me. But for the non-physics majors and engineer majors of the world, I think the football was perfect, man, because everyone can relate to a sport.
Yes.
Most people can relate to football. And I think that was good. And I'll tell you, just maybe I shouldn't be telling you this, Steve, but I'm going to go ahead and say it, man. I printed out all your slides.
Oh, good.
And I spent an hour going over it with a buddy of mine, because he's helped me a lot. I was trying to help him, like, look, man, think of this in terms of football, because he's an English major. He's not an engineer.
That's great. That's
think
great.
About it in this term. So, yeah, because I could see the light went off in his eyes. And one last comment I want to make, and then I will cut you loose and bid you a good day.
Yes.
Is that looking at your report, Mastering Probabilities.
Yes.
And I just want to ask, man, when exactly do you sleep, dude? That thing is 48 pages.
Today was
look at all this.
Today was the short version.
Yeah, that was the Reader's Digest, 48 pages. Yeah, that's the Cliff Notes version. Yeah.
Well, I tell you, it's great. What actually is great is I get to do a couple hours after the market closes, and then I'm up early in the morning anyway. So between 6 and 8 o'clock, 7:30, and it helps me to prepare for the show. I feel like I have a good pulse on what's going on in all the marketplaces around the world, currency-wise, futures-wise, and it just makes hopping in this chair here so much easier. So I'm glad that you appreciate all of that work, and always good to hear from you.
Appreciate it, Stephen. Just so you know, I'm going to, when my month's up here, I'm going to be joining or buying, rather, your, because I loaded up on some Tiger dollars, so I'm going to be a permanent customer because I was just absolutely blown away by it. So anyway,
cool.
Steve, thank you so very, very much.
You
learned so much from you, man. I just wanted to call and say thanks.
We appreciate that. You have a great day.
All right, Steve, take care.
You bet. Let's go to Lou in Nashua. Lou, thanks for calling. Thanks for holding.
Yeah, thanks for taking my call.
You bet.
Looking at ORLY.
O'Reilly Automotive, I believe?
That's right.
Okay, tell me what you're doing here and how I can help you.
I'm not doing anything yet. I'm just wondering if it's a buy here.
Okay, great. We're about to go into the segment, so as soon as the market opens, we'll come right back to Lou and Nashua. We're going to take a look at O'Reilly Automotive, see if it is a buy out there. 877-927-6648. Market should open up. We've got the Dow up 40 points, ES Mini up almost 7. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of tfnn.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of tfnn.com, and for more information on Great Panther Silver, you can click on their banner on the front page of tfnn.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're up to the races. We got the Dow up 41 points, S&P up 7. Composite up 21, being powered by Apple. That's up 11 bucks and change right now. Russell 2000 up 4 points. Microsoft down 3 pennies. Google up 5 bucks. Cisco flat. Leading the charge on the way up is Apple. You got Panera Bread. They were out with earnings last night. They're up 10 bucks and change, up 6%. You got Lumber Liquidators, LL, number 3 out there. They're up 12.5%, up $6.50. Regeneron Pharmaceuticals, REGN, they're up 5 bucks and change. Facebook up 4 bucks. Silicon Laboratories up 4 as well. Google up 4. Buffalo Wild Wings having a little hot sauce this morning, down $9 and change, off 10%. Netflix off 11%. United Therapeutics down 13. Tempur-Pedic having apparently a bad night's sleep, down 20% this morning. That's trading off $6. Let's go back up to Nashua to our man Lou. We're taking a look at O'Reilly Automotive, ticker symbol ORLY, trading out right now at $82.73. So, Lou, as I take a look at this stock chart and I see what it is that you're looking at, I think what Lou's looking at, folks, you've got this high volume gap down area that occurred on June the 27th. Really had quite a bit of volume there. 12.8 million shares come out of it. Made a little bit lower low on that following trading session on June 28th. That day had 3.5 million shares. And so as I take, and it did complete, very close to completing a 1 to 1.618 A to B equals CD. So since that time frame, which takes you back to June 27th, it's really been traveling in a little sideways consolidation. Now that consolidation was really set up by the day that it gapped down, and that is where you've got a major area of resistance. That level, that's a little open window. It was tested here on the, was tested really on the July 18th and July 19th level. That rejected that area and moved all the way back down to the bottom here. What I would suggest you do, Lou, if you wanted to take a trade on this, is I would wait until one of two things. If you take a look at how the candle came down on both October 17th and October 18th. October 17th, O'Reilly Automotive moved down with 3.9 million shares. The next day, 5 million shares. And that was really going into that swing point that has only 3.6 million shares on June 28th. That tells me that the swing point now from October 18th really should be tested. That's got 5 million shares. Now, it might be the high, might be the low. The level there is 81.09. The low is, that's a high. The low is 78.58. What you'd like to see is you'd like to see a test of that area on less than 5 million shares. Now then, preferably, you'd like to see some type of bullish candle signal out there. But here's your problem. This thing has really been trading in a lower range consolidation ever since the July 30th level. So you may only get out of this equity here 85. It may only get up to about 85.97 to 87.58 because that is what last time stopped it in its tracks out there. And it's just that sideways consolidation. So it may not be the right reward to risk trade setup for you. However, if you're coming into Friday or Monday when I expect that we'll see a market turn here, going into the election time frame, then it might be the trade setup. The ideal trade setup for you would really be O'Reilly Automotive coming back to the October 27th, 2011 time frame. You've got a open window, you've got a open, which is a gap, you've got the low of that. You'd like to see the low of that, which is 73.97. You'd like to see that tested on less than 3 million shares. If it does that, to me, that's where the buy would be on O'Reilly Automotive. And that would give you enough room for this to run up towards the consolidation area. Does that help you?
Yes, it helps me quite a bit.
Yeah, so I think it's got limited upside potential until it goes down and tests that October 27th. However, if it comes in October 27th with more than 3 million shares, just step aside because it wants to go repair that open window out there.
All right, and I think there's an earnings report tonight.
Oh, is there? Okay, yeah. And I think I would, if that's the case, I would just stay out of the way. I would step out of the way because it just continues to have volume towards the downside. Mm-hmm. All righty?
Thank you.
Hey, you bet. Thanks for calling. Good to hear you. Good to hear from you. We got the Dow up 21 points right now, S&P up 4. So let's go start taking a look at what do we want to take a look at first. I tell you what we want to take a look at first. We certainly must go take a look at the currency marketplace. So let's go take a look at the euro. Let's go see what the Queen is doing out here because that is muy importante. So let's go take a look at the Queen. What we can't see here is we're taking a look at the neckline. That is that red diagonal line that you're seeing if you're watching us on Tiger TV. That is the neckline from a little head and shoulders pattern that was created back in the early August time frame. The head being right down here. That was formed in the late July 24th area. You got the neck that was out here really in the middle of July, early July time frame. And so you had that was the left shoulder, the right shoulder occurring back in the middle of August, early August 6th or so. And so that line continues to be tested. Now, yesterday was a test of that area, rejected it. Today in intraday trading came all the way down a little bit lower. You've rejected it here today. That line is held. If you see the euro close below that level, and that can't give you an exact number, but what we can do is we'll go take a look at an intraday chart. That will give us a level that we would want to be looking at here. That would say for sure that we should expect lower prices over the next couple of days out here because what I expect is nothing more than a one-day bounce. And we'll see just how strong that bounce is, but that's what we should be taking a look at. Now let's go down to a 30-minute chart out here. Let's go find my 30-minute chart on the euro. Here's a 15, but we'll go ahead and we'll make that a 30-minute chart out here because this is what we really want to be paying attention to is the pattern that's set up here on the euro. Let me refresh my screen. What we're going to see here is as this refreshes, we'll draw an A to B equals CD down that completed earlier this morning. Oh, boy. I don't know why. I have a little bit of a data feed problem. So I'll tell you what I'm going to do during the next break so that I don't bore you with trying to get this set up. Oh, there we go. Okay. Now we're talking. So let me get rid of the lines out here. Let's go take a look at the A to B equals CD down pattern in the 30-minute chart on the Queen. We're going to start with the time frame of October 17th, 12 noon. The high there, 131.883. That's your A point. Your B point was as the euro looks like it was making a low. We're going to use right down here in this little, well, actually, looks like the low came in at 12 noon on October the 19th. Goes ahead, makes a retracement up to a level. That's our C point, the retracement at 10:30 in the morning on the 22nd of October. So 1 to 1.272 A to B equals CD. Price projection of that was 1.29213. It actually got down to a level of 1.29211. You got to love that. You can see as I expand or contract my screen here, it adjusts the numbers just slightly out there. Really making a perfect 1 to 1.272 A to B equals CD. No bullish candles showed up there, not until that level was tested again at 6:30 this morning. Gave you a little bullish engulfing candle. The candle after that really negated it. What this does set up is a bounce in the euro. That's what we're seeing here right now. This thing may not really, because it hasn't given me the real bullish confirmation here, this thing may not do anything more than make, as it does this little slight bounce here, make a 100% move of a move. It's really inside that candle, or it's tested that, well, it tested that area. We'd use the candle here from 3:30 in the morning. The low there, 1.29734. and the high of that candle, 1.29955. If we had gotten some bullish confirmation out here, then what this would be telling us is you could see a pretty decent bounce, which would put a pretty decent bounce in the marketplace. Now, not that it can't happen, but it's not a trade that I would be willing to take here. And I love trading currencies, but it's not giving me the signals that I would need in order to be able to take that trade. But you could see a bounce in the euro up to 1.301811. That put a little juice in the marketplace. That would be the 0.618 of nothing more than the last leg down. That was your C to D leg out there. But as far as price, I was giving you the price. If you see and I really can't go back to that trend line, I guess, on the daily and give it up to you. I'll tell you one thing's for sure, though. You get a close below the 1.29193, and it's probably above that area. But you get a close below that, and if you're long, you better hold on to your horses because you've got volatility out there big time. You had the VIX index up about a little over 18%, I believe, yesterday. The VIX index, volatility index, closing out at... trading out right now at $17.99, down 84 pennies out there. But that thing, a lot of volatility. I believe it closed up 13%, and that says be ready for volatility. That's what you're going to see in the marketplace until things calm down. I don't know when things are going to calm down. Let's go take a look at some of these stocks here that are popping and dropping. How about Facebook? Now, on Facebook, that thing was up this morning. Let's see, where is that trading? Up 20% this morning, up $4 and change. So let's go take a look at the Facebook chart. I don't know that we have actually done that on this show here. FB is the ticker symbol. And this thing is up with volume. Do not get in front of this because this is a freight train. And I've got to get the numbers. In fact, I assume that David White will be here today. I will send him a email. Listen in on David's show, or maybe he can give me the numbers. I'll follow back up on it tomorrow. But I do believe there are still a huge number of Facebook shares that are going to be hitting the marketplace. These are employees that had stock option awards and so forth, and you're coming into the holiday season. You know, they have seen what was in their mind wealth on the day of it opening in the $45 level, go all the way down into the $17 level. Now that it's up at $23, and as price rises, what do you think they're more inclined to do? Sit there and be patient and say this is a great long term? Or do you think they might say, I'd like to have one heck of a nice holiday, and I'll turn that paper into some green paper out there? And so I would really be cautious out here. I would not get in front of this equity. It's up nicely today, volume-wise. It's up with 76 million shares thus far. But I just think there's too much float that is going to be coming into the marketplace. That is on Facebook. Let's go take a look at Panera Bread. That loaf is rising today. PNRA up a nice 5% here this morning, up $8 and change. Gapping up. This equity here is gapped up, gapped down. It's done a little bit of everything all around town out here. Gapping up this morning, volume-wise here, it's done 219,000 shares. This has had signs of institutional selling really all over the place. Let me just get rid of some lines out here. You've got institutional selling. The first time institutional selling showed up in Panera Bread was right here in February of 2012. Then you had volume of 3.5 million shares, get down to a low out there of 147.92, made a lower low coming into the June time frame. If we take a look at this, had a little sign of strength here back in July 25th as this moves back up with less than 3 million shares, 2.9 million shares out here. You had a little bit sign of strength, which actually took out a resistance area. So it took out a resistance area. I'll draw a line across here so we can take a look at that. When you take out a resistance area, that says that the polarity, which at this stage was to the downside, now changes to the upside. That's the red line going across my screen out there. And that says, okay, time to potentially play a momentum play. However, where it broke above was a level of 165.99. That's the high for March 27th. All that it did, it gave you a set of, I'll say, bearish-looking candles, which was on October 4th, October 3rd, October 2nd out there. Only got up to a price point of 175. and then started giving it up. And then the sellers started showing back up in this equity here. So I would say this equity is nothing more than confused out there, and that is on Panera Bread. Having a nice morning today, but the bread is just rising, and maybe somebody's going to go ahead and cut that, slice it, and use it for toast, which could be French toast. Let's go take a look at Apple. Let's go see what Apple is doing out here. Apple up $8 and change here. So Apple moving the markets a bit. So let's go take a look at Apple. Oh, I'm on the currency chart, so it'd be good if I actually go to my show charts out here. So now I got to remember that's where I've got the Facebook chart. So Apple is somewhere right on my screen. Come on, there we go. So Apple, let's go take a look at Apple. Trading out right now at $622.42. Apple here breaking a trend line. Trend line that goes back to the May 18, 2012 time frame. So really not too bad. You got 5 months out there breaking that trend line. That's a dangerous sign. Apple really wants lower price. Apple wants to get down into, at least it wants to go take a look at the folks that are stranded on this little island bottom, island reversal bottom that it formed back in the July 25th, 26 and 27 time frame. That says that what Apple really wants to do is come down and see if it can repair the window, which is on the July 30th time frame. So 587.82, 13 million shares. That looks to me like the first target where we'll see Apple releasing additional information to us. Otherwise, right now, Apple wants lower price, even though it's up $8 and change right now. 877-927-6648. When we get back, let's go take a look at Buffalo Wild Wings getting smoked this morning. We'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, the Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. 877-927-6648. We have the Dow up 15 right now. S&P up 2. Ooh, that's the only bounce out there. That is dangerous. Let me show you. I said we'd go take a look at Buffalo Wild Wings, and we will if we can. But let me show you something that's actually more important, something that here's a lesson, and you want to replay this over and over again, and you want to go ahead and make sure that you're aware of this pattern. Now, one of my favorite patterns out there is the Three River Evening or Morning Star, really named after the great Japanese general out there, Oda Nobunaga. And I want to show you a pattern. Now, that is a three-candle pattern formation out here. What I've noticed in studying charts, going back, taking a look at the Dow, and almost memorizing different candle patterns that show themselves either at highs or lows out there, has been a version of that Three-River Morning Star. And if we take a look at the, I'm going to come all the way back here to the lows from June 4th out here. See, you've got this wide-ranging bar on the way down. This is the red candle. If you're watching us on Tiger TV out here, you got this wide-ranging bar as the market's moving down on June 1st. Then what you have is you have these two other short bodies. Now, those two short bodies, after a long-ranging bar to the downside, telling you that the market is losing its steam out there. You got a open and close that really are just below or just slightly into the session low of the candle on June 1st. And then what we have is the market just totally takes up, moves up on June the 6th out there. This wide-ranging bar to the upside. Now, normally you just have three bars out. When you have four bars here, and I can't tell you why. I can just tell you pattern recognition and going back and taking a look at candle charts out there has really powerful messages. And the reality was, including myself, because, I was just like, really? Because the market, Europe was falling apart out here. That's why you just simply get rid of the news. It's what is the market telling you. That's what you really want to be able to do. That's why you want to understand the candlestick patterns that are out there. Maybe you heard Dave called in. That was the workshop that I put on last week. If you would like to view that as well, you can go ahead. We'll find a way for you to sign up. Maybe send me an email, steve@tfnn.com. It's archived on your members page for at least 30 days out there. And I really recommend, if you're trying to understand and what the market is telling you and read the markets. Well, that is a three-river or four-river Morning Star candle out here. What I was paying attention to was really this area here. Now, this didn't qualify as much because now I'm taking a look at the top here, coming into the October 16th area, because the green bar, the up bar here on October 16th, I would have rather seen it combined for these two bars. Now, in my eyes, I know what I'm looking for, so I went ahead and combined those anyways, and this would have set up here the exact opposite of what we saw down at June 4th. But let me go into an intraday chart, because this is kind of interesting here, and I'm just simply going to go to the 120-minute chart out here. I'll pull that up on my screen. Again, what we're taking a look at here is the Dow. We're taking a look at the big kahuna, the big dog out here. Now, when I put it on the 120-minute chart, actually, it absolutely qualifies. So this now takes me back into the October 16th. So I was back in that October 16th area here. And when I take a look at this, here's an up-thrusting bar that we have. But take a look at this. We didn't have just 3 or 4 small-bodied sessions that just hung out just barely into that green bar session or just above it. You had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 sessions with inside that bar. Before then, you had the market move down. Now, take a look at yesterday's wide-ranging bar. Folks, that tells me that there is a serious area here of resistance. That if that gets taken out, that's a real plus for the bulls. But I would be very, very careful here, because that candle pattern out there, that is communicating a ton of information to us. Folks, stay tuned. Tom and I will be up next on the Money Masters. Basil Chapman from 11 to 12. Daryl Martin 1 to 2. David White, Ken Shreve, the Tom O'Brien Show from 4 to 6. Have a wonderful Wednesday, folks. Look forward to seeing you in a few. We're back at 9 o'clock tomorrow. Take care.